I think it's time to take a load off and relax for a minute. I think the worst has already happened, and I do think we are about to rally. And I'm going to go over why exactly that is, as well as the data that you guys need to know, the PPI numbers, the upcoming catalyst like the bank earnings, as well as Fed Brainerd's testimony that is happening today. And we'll get into all of that. But first off, before we do, I just want to go over a simple principle with you guys, because I see a lot of people, when I or anybody else shares their opinions on why they think the stock is going to move up or do whatever else it is, and some people are in the comment section like it's going back to $10 or 19 or something else. Do you know that hedge funds pay attention to that? That's like, imagine if you're at war with a country, but like you're fighting, two sides are fighting, but within one side there's people fighting each other. That's a weak spot, and they're going to exploit that as much as they can, and that's what they have been doing. So the more negativity that is spread in the comment sections on Twitter, on Reddit, wherever it is, that's hurting the movement more than anything else. And trust me, you don't agree with everything everybody says. I don't agree with 90% of other creators that are spreading false information. But I don't make videos about them or that they're wrong, just flat out wrong, because it will hurt the movement. And I have my money invested in this, so I'm going to do everything in my personal power to not give the hedge funds hope that we are divided. We are unstoppable acting as one. We are a lost cause if we're divided. So that's basically my thought on that. Feel free to do what you guys want to do. I really want to see, after hearing this, what kind of negativity is still in the comment sections. It's going to be kind of comical, and I think it'll show a lot about just people in general, about where we sit as a community. So feel free to spread the love or the negativity down below in the comment sections. But without any further ado, let's dive into this video. AMC is positive 0.44% at the time of this recording, which is definitely a good thing to see, as the Nasdaq is down about 0.5%, Russell 2000 is up 0.66%, and the Dow Jones is up the most, up 0.61%. Well, it's actually not doing as good as the Russell, so that's interesting right there. But we do have some things that came out as far as news is concerned. So the PPI numbers jumped nearly 10% in 2021, another sign of growing inflation. We also see that weekly jobless claims total 230,000, well above the estimate, through the 4-week average of filings hit its lowest since 1973. So it's higher than it was estimated to be, so not good right there. But still, through the 4-week average of filings hit its lowest since 1973. That's definitely positive. Definitely positive. And that's something, you should be excited for if you're a bull for the markets. I don't really think it matters if the markets crash or not to see the MOAS, just because the liquidity will be restricted in the second half of 2022, no matter what happens, no matter crash or not. You got no stimulus. You got, all these other things that are happening that are gone. Right, the Fed is becoming a super hawk. They're taking all of this liquidity out of the markets. There's literally 10 or more things that are happening that are reducing liquidity, not even to mention China and the companies that are defaulting and that whole situation. Long story short, liquidity will be drained in the second half of 2022, crash or not. So I don't think it matters all too much. So that's the scoop on that. Not too much else to really add. I think the higher inflation and the low unemployment is definitely going to give fuel to the fire as far as the Fed and cracking down and becoming even more hawkish. And as you guys probably seen, Aron says he is done selling his shares, that he still has
owns or plans to vest in 2.3 million AMC shares he is in. And that's exactly the point. Somebody was saying, well, he doesn't own any shares. He says he's plans to vest. That's like Porsche and Volkswagen in 2008. Porsche only owned about 50%, I believe 50% of the outstanding shares. Another company owned 20%, but Porsche also had indirectly ownership of like 20% of the float through options. So that's exactly what that is. So technically, he does have the float, that 2 million shares, allocated to him already. So it's kind of locked up. So that's a situation with that. Give him a little bit of give him a break, give him some credit. I mean, come on now. So that's really what I have to say on that. As far as the other catalysts throughout the rest of the week, obviously we are going to have the bank earnings that are coming. And that's going to be important because, with earnings and high inflation and when the Fed is tightening, if you have earnings coming out really good, then it kind of offsets the higher inflation and the Fed going hawkish. If you have earnings that start to drop dramatically, then that changes the whole equation and everything's out of whack. So if that happens, do expect the markets to come down, that liquidity to be restricted even more. If the earnings are good, which I think they will be because these earnings are for Q4, then expect the markets could have a bullish response. What is going to be even more important is Q1 2022, as all the stimulus is gone. We will have tax returns that have went out, but that's really the only form of extra money that's going to be floating out in the economy, and that's what's going to be even more important than Q4 2021 earnings. So next earnings reports are going to be important. Obviously, those will be around March-ish, May, and that's going to be the important time frame to be watching for. Now, as far as why I personally think AMC is about to rally, and this is totally a personal opinion here, is because we have hit these lows. As you guys do know, $20.80, $20.80, and we have been floating around this area as these negative catalysts have since came and went. Now, we also do have the Fed meeting that is January 26th and the 27th, and that's the FOMC, where essentially Fed Jerome Powell is going to read a report about what they think inflation is going to be, economic growth, what they plan to do. And, as long as that doesn't change around too much, I mean, the markets are already pricing in a pretty hawkish Fed. So as long as something crazy doesn't come out, then I think we're going to have plenty of room to rally to the upside because we are just pinned at these prices. I mean, we're not dropping. We're not really rallying. We're doing this as well off a very low volume. So I think it's inevitable. Volume's going to come back into the stock with the next catalyst or whatever hell else it is. We're going to see volume come into the stock, and I do think we're going to make that move up. And simply put, if we were going to continue to drop, I think it would have happened already because the markets have already priced in a lot of hawkish things, a lot of bad things. And even on top of that, look at the Bollinger Bands. We have to break above the 20-day simple moving average that is at $26.12 per share. And I think it's going to be fairly easy to break out above that. And once you do, that's when you're going to see a lot of momentum to the upside start to happen for AMC. So to sum it all up in the simplest terms possible, in just a couple words, the worst has already happened. I think the fundamental valuation is supported around $20 per share. So could you drop another $2? Sure. Are we going to break under 20? I don't personally think so, unless we have a major development within the company that changes the fundamental valuation to the downside, which I don't see happening anytime soon. I really don't see it happening at all. But let's move on to some of the other data that is important to point out, like the Ortex data. We're looking at 19.29% short interest of free float. Keep in mind, we just had the settlement day for December 31st. That short interest was released on January 11th, and that came in at 18.5%. We have obviously taken a move to the downside since December 31st. So we know short interest is going to be higher, and you're looking at 99.03 million shares that are estimated to be sold short. Share utilization is staying almost exactly the same at 76.38%. Days to cover at 2.5 days to cover. So not too much has actually changed as far as days to cover, share utilization, cost to borrow, but the short interest estimates are going up. So that is a good thing to see compared to seeing the short interest estimate going down. I'll take that any day. As far as the Ortex data, you are only looking at about 7,700 calls that are in the money for this Friday, 121,000 calls that are out of the money for this Friday. So we could set up for another mega bounce type scenario if we do see a strong move tomorrow. If bank earnings are good, wouldn't surprise me to go up substantially with AMC stock. But as far as the most important week, January 21st, you are looking at 98,000 calls that are in the money. That still, some of these still need to be fully hedged for today and tomorrow. And you do have almost 600,000 calls that are out of the money. Unfortunately, most of these calls are held deep out of the money. But if we can break past certain thresholds, like $25, about $10,000 for open interest, about $21,000 for open interest at the $30 strike, and then that big one at the $40 strike, that's $62,000 for open interest, then you're really going to start the snowball effect. And if we can break over 100 for whatever reason, however it happens, that will be really good. But keep in mind, 207,000 of this open interest is held at the $145 strike. So just keep that in mind, guys. There's a lot of the open interest held deep down the chain, but if we can break past 40, the situation is looking really, really good. So that is pretty much going to do it for this video. That is really all you guys need to know. Keep in mind, yet again, why I say the fundamental valuation is pretty much supported at $20 per share is because the institutional ownership has been increasing about 32 million shares since we have hit about $20 per share. So you're definitely seeing institutional investors finding value in AMC at these prices. So that's all. Love and appreciate you guys. Thank you for watching. Make sure to check out the link down below in the description of this video for Moomoo. Get yourself 5 free stocks when you deposit $100. It's free money, as well as you do have the links for Webull and Public as well. And if you guys want access to all of my trades in real time, the link for that is down below in the pinned comment of this video. Love and appreciate you guys. Thank you for watching. I'll see you in the next one.